be going over HSA programs. We're going to be going over health savings accounts, how these policies will work best for your clients. And we will be covering the blue options HSA accounts and HSA qualified programs. Now, one of the things I hope everyone has been through is going to be our latest Blue Care programs. The Blue Care programs that are going to be available through the new products being released on 7/23 will have some really interesting and new HSA programs, HSA qualified insurance policies that you'll be able to utilize. So that being said, let's get right into it. And what we will do is we will go through all of the information that you're going to need to make sure that you have everything that you're going to need to be successful utilizing HSA accounts and HSA style programs. So the first thing I want to do is I want to address what is an HSA qualified program and what is an HSA itself. Real basic that we need to understand is HSAs are available in two different platforms when it comes to Blue Cross Blue Shield of Florida. Now, all of our HSA programs under the Blue Options Network are going to be defined in the 600 series of plans. It will be an 800 series of plans in the Blue Care because they're all 800 series. But on the 600 series of plans, the first thing you need to understand is even numbers on an HSA program are for individuals and odd numbers are for families. Okay, so this particular quote that you'll see that I have in front is for an individual. That's why we only see even numbers, 222, 24, 6, 40, 42, and so on. If this was going to be a quote for a family, then it would be an odd number, 623, 625, 627, 641. The easiest way that I can illustrate to everyone to remember the difference between the plan numbers, because we have so many with Blue Cross Blue Shield, is think of it clearly like this. I have an odd family. Now, we all have an odd family in any way, shape, or form, which as we all know, and therefore odd numbers are for family. So if you're looking at AutoQuote, if you're utilizing AutoQuote, then you will want to be looking at the odd numbers of programs. It will give you a quote for the odd numbers, the 623. However, it will not be acceptable when you go to write the piece of business in IST. Odd family. So let's just make sure that everybody understands that, make sure everybody embraces that. You have an odd family, and then you'll never forget that a 623 is for a family, whereas a 625 is for a family because those are odd numbers. Okay, so let's talk about HSAs on an individual basis. The simplest way that I can explain an HSA program is that on an HSA policy, you have one deductible. After that deductible has been satisfied, everything, including prescription drugs, is covered at 100%. I will have to pay for all of my doctor visits, except for my annual wellness examinations. Underneath the parameters of a compliant program for healthcare reform, all of our wellness benefits still have to be included. So keep that in mind. They are still going to get their checkup covered. They are still going to get coverage for their mammograms, colonoscopies, with no out-of-pocket expenses. However, if I go to the doctor and I'm visiting the physician, I am going to first have to satisfy my deductible, and then I will be covered at 100%. Now, as you all know, the power of Blue Cross Blue Shield is our negotiated rates. So, for example, if I go to the doctor and my standard off-the-street bill is $250, the Blue Cross Blue Shield allowed amount may be $100. I would simply pay that $100, and the $100 would then apply towards my deductible. Once I have satisfied that deductible in any way, shape, or form, at that point, I will be covered 100% for all medical services, including prescription drugs. Now, the coverage of 100% including prescription drugs is only in the event when I have left and included the integrated RX. Okay? So, for example, if I'm looking at my HSA programs, looks like I'm having a little bit of a computer issue here. And you'll see this little green button over here on the right-hand side which says Integrated RX. Now, this means that the Integrated RX is already included in this pricing. And therefore, once I satisfy my deductible, I will be covered at 100% for all medical services, including the drugs. Now, the underwriting parameters that are addressed when Integrated RX are more stringent than when we are dealing with a policy that does not have Integrated RX. My advice is going to be that you do not remove the integrated RX that is built into the policy unless you have someone that has questionable insurability because of their drugs, because at that point the underwriting will be easier. But in the event that they do meet their deductible, they are going to then wonder how come their drugs are not being covered. Why are they only getting a discount on those medications following the satisfaction of the deductible? So it is really important that you keep that in mind, and really important that when you're looking at that, you also include that integrated RX. If they want to add the integrated RX at a later date, then they will have to go back through underwriting. So for example, I have done a proposal for this particular person. If I want to create a new proposal, and they have accepted the policy, they were issued and approved, and the integrated RX was not included, well then in that scenario, they will have to go back through underwriting before they will be able to add that benefit. So as I was just showing you, I was showing you a family, an individual, excuse me. And if we go through and we now do a husband and wife, you will now see that the odd numbers will be there because remember, I have an odd family. Oops. Sorry about that, everybody. Let's just adjust that. Now, when I'm looking at this here, this is going to bring me back to my quote screen. I'm going to add my plans, and you can see here's my 623. Now, my 623 is going to be my option, my HSA option. It's a 600 series. There's a husband and wife on this policy, and they are an odd family, therefore it's an odd number. If I wanted to add options to this plan, I can simply here 338 or none, 307. And that's where the difference is going to be with that blue script option. So you need to make sure that the higher rate, the rate that is illustrated within Blue Cross Blue Shield auto quote that you have received from us in the training folder, that is going to be listed in there, and it is going to be a higher price. For this husband and wife, it's costing them $31 a month to have that additional benefit. And honestly, the point in time when the customer is going to say that $31 is okay to have that $31 in there is going to be when it's too late and they're already taking prescription drugs that are going to be needed to apply towards that deductible. So please keep that in mind when you're doing a quote and when you're doing this, that you are including that HSA option and including the RX coverage simply by utilizing the add option button that you see here. Now, HSAs have been historically most aggressively priced programs, and they do fit a need. For an individual, it is going to be one deductible, just like it would be with a standard program, and then once that deductible has been satisfied, they will be covered at 100%. In the situation of a family, it is either one person or any combination of the family satisfying that deductible, then they are going to be then covered at 100%. So for example, with this husband and wife, if they would satisfy a $5,000 deductible, either husband and or wife, then both of them are going to be covered at 100%. So if my wife had ended up needing a surgical procedure, she ends up satisfying her deductible of $5,000. Now both myself as well as my wife are not going to pay for any medical treatment that is medically necessary and not on the exclusion list, such as cosmetic surgery and things of that nature, for the rest of the year. And then that will reset the following year. The client must understand that this option is very strong. However, they will be paying higher amounts for medical treatment underneath that deductible. Just a slight side note here, those of you that are thinking outside the box will realize that in the scenario of I sell a 623 with a $5,000 deductible and I implement an accident medical expense policy, if husband or wife end up in the emergency room due to an accident and they have a $10,000 claim, well, they're going to satisfy that entire calendar year deductible for the $100 service fee that's going to be available on that policy, accident medical expense. And then for the rest of the year, all family members are going to be covered at 100%. So it is very important that when you're talking about these policies and you're looking at these deductibles, that you are adding those accident medical expense policies, because as we all know, statistically speaking, the option is that they are going to end up in the hospital because of an accident, not because of a heart attack or stroke perhaps. But hopefully what you are also doing is you're implementing a secondary product such as a critical illness to help with those other catastrophic things. So it's very nice, especially when you're talking about a family of 5, because as we know, if we're looking at a predictable cost plan or if we're looking at a 700 policy, those deductibles, those out-of-pocket expenses are per person with a family aggregate. Okay? Now, when we're looking at that, a lot of people say to me, well, the $5,000 deductible here is $338. If I'm looking at a predictable cost plan, that predictable cost plan, something like a 533, well, that policy is going to be less expensive. It's not a significant amount less expensive. We're talking $298, okay, those of you that are looking at the screen here, $298 compared to $338. But my financial exposure for this husband and wife, the difference is $5,000. Because if one person satisfies the deductible on the 533, the other person still has co-pays, out-of-pocket expenses. And then on top of that, they still are always on a predictable cost plan going to pay for prescription drugs. However, with our HSA options, this 623, once they satisfy this $5,000, then everything, as long as I have this listed right here, is going to be covered at 100%. So their financial exposure is significantly reduced. If you did the math and you actually take the monthly premium of $298, you take a deductible of $5,000 for each person, and you figure that someone would satisfy both out-of-pockets, you're going to pay the premiums anyway, and the out-of-pocket maximums, they are going to have less financial liability with the HSA of the 623 in this scenario. So you do want to be aware of it. However, there is a nice luxury of having a doctor visit copay that does make people feel good. Because if you have a child that may be a 5-year-old and you have to go to the doctor 4 or 5 times, you're going to be paying more than your copay that is going to be listed on a predictable cost plan underneath an HSA. So the likelihood of them satisfying that deductible, hopefully they do not, but they also will have a total less financial liability in the event that they have this HSA style plan. So HSAs are interesting. HSAs are very strong and is something that you definitely want to make sure that you mix into your product options and when you talk to people. Now, the HSA programs will not, as you can clearly see here, cover maternity. Okay? If you're looking at it, you can see right here that maternity is not available on any of our HSA programs. Okay? Now, that means they will pay out of pocket for all maternity-style benefits, prenatal care, and maternity is not going to be something that you're going to be able to add to those programs. As we start to talk about HSA accounts moving forward, then you'll understand how that's going to work and how you'll be able to help your clients with that, even though the maternity option is not available. Keep in mind, with like any of our Blue Cross programs, complications of pregnancy will be covered under the parameters of these plans. Okay. So the 623 is a very strong plan. It's a 100% coverage after a $5,000 deductible. Our 625, just a little bit of higher out of pocket, $7,000, and then $10,000 on the 627. And be mindful that if you're comparing a $223 product on a 627 with a $10,000 max out of pocket, and you're trying to compare that to a 532, and you're wondering why it's less expensive, because this deductible is per person. They do get the luxury of the doctor visit copays, prescription copays on the 532 because that is a predictable cost plan. They will pay for all medical expenses out of pocket on the 627, but if heaven forbid they satisfy one $10,000 deductible on a 627, whether it's for an accident or a critical illness, and you have those added protection features into that policy, then they are going to be covered at 100% for all medical services following that deductible. So it's very interesting, and it's something that you definitely want to make sure you talk about, because financial liability in the large catastrophic scenarios is a big difference. If you have an honest mathematical conversation with your client and you say to them, okay, I'm going to give you the 535 program, and that's $221 a month, but you could potentially be out of pocket an additional $10,000 on this plan, is the copay going to be better suited for you? It's really an option that's up to the client that you need to make sure they're aware of. You know, for an additional, as we're looking at it, $2 a month, do they want to have that exposure? A lot of us ask the question of, how do you treat your medical? How do you go to the doctor much? And if you ask that question and they're only doing their wellness examinations, then that 627 at that same size deductible may be a better option for them, because they're both contributing to one deductible, and once satisfied, it is complete. So the addition of a 627 with an accident medical expense policy of $10,000 is a great solution. Now, you do have to be aware, everybody, that when you're looking at these programs and when you are addressing these programs, that blood work is not, I repeat, is not covered at 100% for outside of a wellness visit. We are also used to talking to our clients and saying that if you go to Quest Diagnostics, you're not going to pay for blood work regardless of the plan that you've taken. It's covered on all of our plans. Well, that is not consistent with an HSA, because with an HSA plan, they will get the negotiated rate at Quest, which is going to be very strong, but it will not be free. So you need to be aware of that. Now, moving along, they've actually created a few other programs that are quite interesting. For example, the 641. Now, I get this question quite often when it comes to the 641 plan, because on a 641 plan, this has coinsurance. So I want to explain to everyone how this works. What will happen is you have a bucket of money that the family must fill up on an HSA. This is HSA qualified, so it is still going to follow those rules. Once any one person or combination of the family satisfies a $3,000 deductible, at that point, this becomes a 90-10 program. It is a shared cost program, okay? So you will pay, 90% will be paid by the insurance company, 10% will be paid by the insured, and when they reach a maximum out-of-pocket of $6,000 for the family, well, at that point, everyone will be covered at 100%. This particular policy that I'm looking at here, okay, does not have 100% coverage for medications under the parameters of a 641. So after they meet their in-network calendar year deductible, they will have a copay for generic medications. They will have an in-network deductible and a copay for brand names or non-preferred medications. Okay? So that is going to apply to their in-network out-of-pocket maximum, as you can clearly see it defined here. However, it is not going to be covered at 100% for everything after they satisfy their deductible. So if you're using the language of, with an HSA plan, we're going to cover everything at 100% following your deductible, do not illustrate a 641, because that would not be correct. Be mindful of the benefits in the program. Now, with these HSA programs, they still have no lifetime maximum. They are still covering all of the adult wellness. All of that is inclusive and what you're accustomed to. The only variation with Blue Cross on the HSA is going to be how they do this cost-sharing bit and how they do the 90-10 program on the 640 and 641. Both of those plans will be available on a cost-sharing basis. So you must be aware of that. These are great options. The 641 program is going to be a little bit more expensive because it has that lower $3,000 deductible. Okay? As we look at further cost-sharing opportunities here, if we're looking at the 661 or the 663, those policies on a family basis, because they are odd numbers, mind you, are also going to have shared cost of 80-20 on the 661. And here you can see you would have that same family deductible of $3,000 followed by 80-20 coverage with a maximum out-of-pocket, again, for the family of $9,000. Now be mindful as well, adding the integrated RX on those other plans has all of that count towards the deductible. Well, these will also count towards the deductible, but once you satisfy that deductible, there is going to be that same copay schedule that I was illustrating on the 641 plan. So it is really important that you are mindful of that, and it is something that you address because these options are in the latest auto quote with the appropriate pricing. So with that, you definitely want to make sure that you're talking about these particular programs. Again, adding the accident medical expense and critical illness is very important to these plans because you can have a single family member have an accident and now you have satisfied the deductible for the entire family. I can clearly tell you about 5 years ago, our policy premiums for the HSA compatible plans were not able to be touched by any of the competitors. Okay, and that has changed probably over the last year and a half, where our policy premiums on the HSAs are in line with the other parties that are out there, the Humanas and the Aetnas of this world. Now, when we're looking at these, what you have to understand is that they do function, but an HSA is an HSA is an HSA. And where the value becomes to your clients is with the negotiated rate from Blue Cross. Because the negotiated rates from Blue Cross have such a power to them that the out-of-pocket expenses are going to be significantly lower when you're looking at a Humana policy, HSA, that the client is paying for all medical services until the deductible is hit, compared to a policy with Blue Cross. And let me give you an example. Those of you that pay attention to the predictable cost plans know that we will have a $300 calendar year copay on advanced imaging. Now, with that copay of $300, if I had an HSA policy and I had gone to a MRI or advanced imaging situation, I am probably going to pay anywhere between $400 and $600. So there's not a big amount more that they're going to be paying. Of course, this is going to depend on area factors and depend on, what type of MRIs or CAT scan or advanced imaging, but they will pay a little bit more out of pocket. The moral of my story is that the copays are great to have, but the total financial liability will be more outside of an HSA on a catastrophic scenario. So a lot of us move towards these hospital surgical programs immediately when someone says that they're only looking for hospital surgical coverage, but you want to make sure that you talk a little bit about this, because once I satisfy that $5,000, the $7,000, or the $10,000, everything is covered. All rehabilitative services, all doctor visits, all testing, everything is covered at 100%. If we've added the integrated RX, then everything, including prescriptions, is covered at 100%. Now, another great thing that we need to understand is when we're talking about HSA programs is how are drugs treated. Well, if I've added the integrated RX to the 623, and this particular family is taking a medication that is $100 a month, each month I know that I am going to automatically satisfy $100 of this deductible every single month. Right off the bat, I know that I've satisfied $1,200 of this deductible before I have had one lick of medical services taken care of. So that's also something to think about. Now, you must understand as well, medical underwriting is going to make the final determination, but if someone is taking $250 worth of drugs, this is probably not going to be the best solution for them, because they're not going to issue that policy, or they're going to rate the policy an extreme amount because of the high cost in medications. And at that point, you will definitely want to reference your RX calculator with the cost of the medications, the premium breakdown, so that way you're looking at the monthly premium for that one particular client. And that way you can make a determination of what the underwriting is going to be and what the final decision is going to be. Now, if you're wondering on where to find that premium breakdown, in Access Blue IST, when you're doing a proposal and you have this screen in front of you like this, there is this little button right here that says Premium Breakdown. So right here, I can clearly see what the premium breakdown is going to be for this husband and for the wife. I can see that the applicant is paying $147, the spouse is paying $160, so that does get asked quite often, and you can see how that breaks down right here. In AutoQuote, it is very simple to see it because we have a line-by-line on the Data tab, but if you'd like to further break it down when you're in the Blue Cross website, you can utilize this premium breakdown right here. So having the drugs count towards the deductible significantly help our clients, and that's why we definitely want to make sure that we add that benefit. But be aware that if they would like to remove the integrated RX, the underwriting is going to be much easier. If you have a client that is taking multiple medications, they are not going to rate that policy as drastically, and they will issue the policy quicker because the carrier understands and knows that they are not paying for those drugs, even if they satisfy that deductible. Since the liability is so far reduced on the carrier level, therefore the underwriting is going to be expedited and it's going to be more lenient. So make sure that you use that to your advantage when necessary. So HSA programs are fitting a need, and you also have to understand how they work from a financial standpoint for your clients. So when you open up an HSA style of insurance policy, it will also allow you to open up an HSA savings account, okay? It's a health savings account. There are a couple of documents that are available on Access Blue in the Form Center that you're going to want to pull off and look at. One of them is your guide to health savings account, okay? And this is a great option for you to learn more about after this call today. And it's going to go through using your HSA account, setting up an HSA account as well. Now, with an HSA account, the account themselves has to be opened up with a lending institution. We don't do anything with the HSA account. All we do is sell an HSA compatible program that they can utilize with their HSA account. The qualified program means it cannot have first dollar coverage or copays. So I would warn everyone that if someone is looking for a doctor visit copay, an HSA is not a solution for them. Because anyone who tells you that they have an HSA program and they have doctor visit copays does not know what they're talking about. Because an HSA program cannot have doctor visit copays. So we take care of the HSA compatible plan. That's what we sell. Some of you may be an accountant that are on this call today. However, I would advise no tax advice whatsoever, but I think that you all need to be knowledgeable about the taxation of an HSA account and how it works. For self-employed people, for individuals, they have the option to open up an HSA account, and with Blue Cross, we use HS Mellon Bank. Okay? Now, you don't make any money on the HSA account when they open it, and this is just documentation that they are going to get from the carrier that states they are eligible to open up an account through Mellon Bank. Now, with that, let me explain how an HSA account works. It allows your clients to put pre-tax dollars into an account which they will earn interest on. That account money can be used to pay for medical expenses. That is their money. It rolls over from year to year, and they continue to earn interest on that money, and they could pay for all qualified expenses under IRS tax law to pay for different things. Now, they can take it out for a trip to Tahiti if they would really like to, but they are going to have a tax burden and they are going to have a penalty. But it is their money. There are these programs, just for some of you that have been in the business for a while and may have heard of, Msa Accounts. Now, those Msa accounts that used to be in the marketplace were a use it or lose it kind of scenario, where if they didn't use the money in the Msa account, they would be able to then lose it and not use it for the next year. But those have become less and less popular, and they are not something that we are talking about. On an individual basis, this is an HSA. Now, you can pay for all different kinds of things out of your HSA account on a favorable tax basis. Now, the best thing for you to do is reference the IRS website if you have questions about this. This document will show what is available to pay out of the HSA account. You cannot pay your own premiums for health insurance out of your HSA account. But what you can pay is long-term care premiums. Okay? Long-term care premiums are still a qualified expense to pay out of that HSA account. So, for example, someone contributes to their HSA for 10 years. They've got $15,000 or $20,000 in that account, and they want to start to pay for their long-term care premiums because now they're on Medicare and they no longer have it. That's still their money. They can still utilize that money, and it would be qualified expenses at that point in time. They could pay for long-term care premiums pre their age of 65 with that HSA account money as well. Here is a small list that you can see of things that are qualified expenses, but again, please make sure that you note the IRS website for all updated information on tax information. Okay. As you look through an HSA, the HSA accounts, they can also pay for prenatal care visits out of their HSA account. It just does not apply towards their deductible because it's not a qualified expense under the health plan. Okay. So HSA accounts have a limit on an annual basis that people can put into their account, and this limit changes on a regular basis. I pulled up the 2012 contribution limit so you guys can all see it, and basically the way that it works is the contribution for an individual is $3,100, and for a family is $6,250 for 2012. That is the most amount of money that they can put in that account on a tax favorable basis. They can put in that account as much money as they would like to. However, they're only going to get that amount of a favorable tax treatment on those amounts, $3,100 and $6,250. After their age of 55 or older, they can do some catch-up if they haven't made contributions in the past appropriately to $7,150, an extra $1,000. And that's for a single or a family. As you can see, historically, these have gone up. Okay, and they will probably continue to go up with healthcare reform and the individual mandate passing and different things of that nature. But take a note of this, everyone. $3,100 and $6,250 for 2012 is the most that they can put on a tax favorable basis. That's all they're going to be able to write off on their taxes as a contribution to their HSA. And that money will roll over from year to year. Now, different banks will have different rules when it comes to that HSA account itself. Okay? Now, some banks will have minimum contribution requirements. Okay? Let me show you an example of how HS Mellon Bank does it. I keep on calling it HS Mellon, but it's Mellon Bank. I don't know why. So the way that the Mellon Bank uses is they charge an account setup fee. Okay? They charge a monthly fee for having the account, and they have minimum balances and monthly fee investments if they open it. So it's my advice to you to tell your clients to shop this out. Call some different lending institutions. There are Mellon Bank does it. There Experian does it. There is a list of banks that are out there that will allow you to open up an HSA qualified account. Check out the fees, check out the interest rates, and let your client make that decision. Do not get involved with that because it is just something that you don't want to hurt the relationship on the health insurance because of the account information. They do not have to open the account. That is entirely up to them. It's good advice for them to open up the account, especially for small business owners, self-employed people, but they do not have to. The insurance policy stands on its own. They need to have the insurance policy to open the account. When they open the account, this is what's going to happen. They're going to receive a debit card or a checkbook depending on the bank that they open it with. Once they open up that account, whenever they want to use and pay for medical expenses that are on the list of qualified medical expenses located in this document here, or located on the IRS website, those monies will then automatically be deducted from the account just like a savings account or just like a checking account that they may have. Those monies that are for medical expenses that are associated with their insurance product will also apply towards their deductible. Please don't be fooled in thinking that anything that they pay for out of their HSA account is going to apply towards their deductible. It is only health qualified coverage that is going to apply towards the deductible. So it's really important to know that as well. And what I mean by that is, let's just say that one of your clients uses this policy, gets this policy, and they end up pregnant. And they want to pay for prenatal care through their HSA account because it's a tax favorable basis. Those are pre-tax dollars. There's money that they can utilize that they're not paying taxes on. They're earning interest on that money, and they want to pay for their prenatal care. Well, they can absolutely pay for the prenatal care, but it's not going to apply towards their deductible. And honestly, I would like everyone to be aware, as we're talking about maternity now, the doctor does not have to extend the negotiated rate to the client for prenatal care under the parameters of that plan because there is no maternity benefit. So that being said, you would want to utilize what's called global billing, or you would want to utilize a sheer negotiation tactic with that doctor if they are not going to extend you the negotiated rate for the prenatal care services. But keep well in mind, that they can have that HSA, they can have the HSA account, and pay for the birth of the child with pre-tax dollars that are earning interest. So it does help. And mind you as well, any complications of pregnancy will still be covered under the parameters of the plan, like we would have with any other. So be mindful of that. Be mindful of this document as well. And these numbers are very interesting because self-employed people are always looking for a place where they can make contributions to on a tax-favorable basis, and they can help lower their tax liability by opening up one of these types of programs. They'll be able to pay for all of their child's medical needs, orthodontics, dental care. All can be paid with contributions made to the HSA account through whatever lending institution that they've opened it with, and then applied appropriately to the deductible on the plan for qualified medical expenses. So HSAs are great. I love HSAs. Used to sell a ton of HSAs myself when the ratings were very, very competitive. I want everyone to be prepared that as the Blue Care programs roll out, the policy premiums on the new Blue Care programs, which will be available on Monday, July 23rd, that those policy premiums have had a decrease when we compare a 623 to the new Blue Care 623 lookalike. Benefits identical, just a different network. You're going to be looking at a 30% rate reduction on those policies. So be very excited. I mean, you need to be very excited because what you need to do is you need to understand that with that HSA possibility, when they move to that different network, they are going to be able to utilize that, have the same benefits under a different network, and save themselves 30%. And for this particular family, you're talking, this is just a husband and wife in Tampa, 30% of that $300 is a significant amount of money for the exact same benefits. So it is something that I want you to be aware of, and it is something that you definitely need to understand. Okay? They do get taxation. Somebody had just sent a note over to me that I want everyone to be aware of as well. There is a taxation on contributions over the amount. They're not deductible. I wanted everybody to understand that you can't deduct those, but you can put monies into the account. You only get the favorable tax treatment on the amount that you see listed here, the $3,100 or the $6,250. Again, I don't claim to be a tax advisor. I'm the last person you want to listen to about tax advice. But what I would do is I would advise contacting a CPA, but just giving your folks, the people that you're talking to, the right advice for the insurance product and know what options that they have, because the options that they have are to open up a program that can significantly reduce their financial liability. And especially when you're adding accident medical protection, when you're adding critical illness to these policies, they definitely have opportunities to both lower their tax liability as well as have a great policy in their hand. So that is, in a nutshell, HSA programs. What I'd like to do at this point is open up the phones to some questions. So does anyone have any questions that they would like to ask at this point? I'm going to unmute everyone's phone. So as I unmute everybody's phone, please mute your phone so that way we don't get a lot of feedback and anyone has questions. Marla asked a question if their underwriting is more strict on a 623 versus a hospital surgical. The answer is yes. The reason why is because the financial liability on a 623, which is an HSA plan, is going to be more strict because the hospital surgical does not cover medications. So it is going to be stricter when we compare those two. Anyone else have any questions? Obviously, not everybody can mute their phone. Can everyone mute their phone? And that way, if you have a question, you can unmute it and ask your question. Another question from Marla, good question, is where can we find a list of cooperating banks? I think Google is our friend. I would Google it. It is changing all the time. HSA Bank. I have a list of probably about 6 or 7 that we utilize. But again, I don't recommend anyone. I would just Google HSA banks, and they will be able to give you a list of them. Okay, I'm going to mute everybody's phone. If anybody has a question, they could type it in, and we can make sure that we address it. Okay. All right. How different is the limited network that I mentioned? Well, hopefully, Marla's asking a question of how different is the network that I mentioned. Well, if you were on the training for the predictable cost plans, we talked about this Blue Select programs. The Blue Care network, as we are told, has 90% of all PCPs that take Blue options in it, and has 75% of all specialists that are in the Blue Options network. The Blue Care network is going to be a smaller network. Depending on the area of the state, you are going to have more representation or less. For example, Miami, South Florida, the Blue Care network is very strong. Orlando, it's strong. However, we get into some pockets through mid-state where there is no network availability. And all of that was discussed, I believe, on the training for the Blue Care products, and will be available to you as well as they come through the release in the Form Center. What I would do is I would do some provider searches for everyone, and when you're doing a provider search, just make sure that you're looking at the network. And when you're looking at the network, just make sure that what you're doing is you are looking at the appropriate network for Blue Care. Okay, it's going to be the Blue Care network in the drop-down box. So, for example, if we were looking at a provider directory, which I'm opening up now, you'll see the drop-down box. You're able to select your product. Maybe. Here we go. And what you're going to be looking at is Blue Care, everybody. So that Blue Care network, if you want to, and those products will be available on the 23rd or Monday. So hopefully we've all sat through that training as well. Next question that came through is, after satisfying the copay, everything else is free. Not quite sure if I understand that, but what I would correct that in saying, after satisfying the deductible, everything else that is a covered medical expense will be free, as long as we've added the integrated RX. So what I mean by that is that if you've satisfied, for this particular family on this 623, at $307 a month, if I satisfied my $5,000 deductible, everything is free but my medications. If I add the integrated RX at $338, then everything else is free. Literally, everything else is free. However, be mindful that if it's not a covered expense that the healthcare policy is going to cover, then it is not all free. So you just have to be careful in that, because people hear what they think they're hearing. So you just want to make sure that you're addressing that appropriately. It has to be something that's covered. If somebody wanted to get plastic surgery that is not because of an accident, let's just say they wanted liposuction or they wanted something to that capacity, that is not going to be covered. However, if I satisfied my deductible due to a heart attack, and then after the fact, I've had some stomach problems that I've been putting off and not getting addressed, and I wanted to go get an endoscopy, that endoscopy will be covered at 100%. If I have been putting off going to the dermatologist, then my dermatologist visit will be covered at 100% once I've satisfied that deductible. Hopefully that makes it clear. All right, are there any more questions that anyone would like to ask? All right, where can we find a list of specific items and services they can buy HSA debit card will apply to their deductible? Well, it is all qualified medical expenses. So if it is a qualified medical expense, that is going to apply towards their deductible. So for example, doctor visits, prescription drugs that are emergency room visits, hospitalization, outpatient surgeries, all of the things that the insurance policy would normally cover and not excluded. If it's a non-excluded, if you're looking at the exclusionary list of scenarios, then it's going to be applied towards the deductible. Give you a perfect example. Is if I had a surgical procedure and then after that I went to the dentist and I wanted to pay for the dentist, the dental is not covered under my Blue Options plan. So that is not going to apply towards the deductible. But my surgery would be covered and would apply towards my deductible. There isn't a specific list. It's just you would have to reference the exclusions on the policy, and as long as that medical treatment was not one of those exclusions, it is going to apply towards the deductible. Hopefully that clears that up. But just reference the exclusionary list so that way you know what's excluded, and then you'll know what is not going to apply. It's probably easier to look at it that way. You know, give you a perfect example is if I went to the pharmacy and I, filled a medication. You used to be able to pay for even over-the-counter medications with your HSA account. You cannot any longer. But if you did, for example, that you can pay for it out of your HSA account, but it will not apply towards the deductible. All right, Dennis has a question. How do I get all of the options that you are showing? Health, life, basically Dennis is asking a question regarding IST, which really doesn't apply, but he's asking about these right here, all of this life, accident, critical illness, and hospital. How do you get those on your IST? After you've gone through the ancillary product training that I emailed to everyone, you will have those options built in for you. You need to go through the product training for the ancillary USA Able products, and once you've completed that, then you will have those set up in your IST. All right. Any other questions for anybody? All right. Well, if there's no more questions, I want to thank everybody for coming today. I will have this recorded and located in the training folder, and please access it at any time. My phone is always open if anyone has any questions regarding this or any more specific questions. I hope everybody has a great day and enjoy your weekend. So thank you, everybody, for coming. Have a great day.